Commodity Futures Trading Commission has delayed releasing a proposal for public comment aimed at curbing speculators in the commodities market. My colleague Suzanne O'Halloran has been following these developments, and she joins me now with the CFTC Commissioner, Bart Chilton, in a Bloomberg exclusive. Suzanne?
Thank you very much, Mark. Commissioner Chilton, welcome to the program. Give us an update on what happened. You're fresh from the meeting. There is a delay on publishing the position limits. Tell us what that exactly means.
Well, you know, it's important that we get a rule that's right as opposed to a rule that's expeditious, and I had problems with this particular rule. So, you know, the chairman recessed the meeting, and it seems like something we're going to have to take up again soon. I hope it's soon, because we've got a January implementation date on doing these things.
That's right, but Chairman Gensler yesterday said you're not going to make that January deadline. I think the question is, what needs to be done? What's the holdup?
Right. Well, one of the things we did do today, and I hope it's not lost on folks, is we put in a new systemic regulatory oversight procedure, something I call position points. And when traders go above 10%, certain level, that we will seek their over-the-counter swaps information, and if they end up net above that level, that position point, we have the ability to instruct them to reduce those levels, and I, for one, think we need to do it. There's been too much high concentrations of speculation in these markets at times.
Right. Some of the exchanges, including the CME, are asking the Commission to take a little bit more time with their rulemaking. How much more time do you need, do you think?
Well, you know, people that don't want these things to begin with try to run out the clock. I'm not suggesting that CME is trying to run out the clock, but Congress gave us a mandate, Suzanne. It said January. If we can't get it done in January, and I'm not willing to concede that, but if we can't, there are certainly things that we can do now, like this position point proposal that was adopted. The chairman instructed staff to do it. That at least will be a good stopgap for us before we implement these mandatory position limits that Congress instructed us to do.
Right. In your position points, how quickly will that be implemented for commodity investors and traders?
Right away. Right away. We're going to do it right away. So the largest of the large, Suzanne, the CFTC will be taking a heightened level of oversight on the largest of the large traders. And we may tell them to reduce if they're above a certain level. That's after we get all of their over-the-counter swaps information and see where they are net in the aggregate. If they have the ability to influence markets in a way that is excessive speculation, we can tell them to get down, and I hope we will.
Do you think we're seeing speculators in the market today? Gold and silver, for example, have had big surges this year. Oil was a story back in 08. That's ticking higher as well. Do you think that's currently underway?
Well, you know, I'm not an economist. I'm just a D.C. regulator, so I don't want to overstate what I think's going on. Here's what I can tell you. There is more speculative interest with regard to positions in these markets than at any time in history. Even greater, Suzanne, than in 2008 when we had $150 oil, $4 gas, $24 wheat. Those commodities, the increase in speculative interest in these commodities has increased sharply. There's $149 billion in these markets now, more than ever before.
One of the critics to more regulation for the commodities market is you really don't have the staff. Just yesterday, Chairman Gensler said you need to add about 400 people that understand what can be a very complex trading environment. I mean, if you don't have the people, how can you really take a thoughtful look at rulemaking and implement it?
We can't. The chairman is absolutely correct in that score. I agree with him. But what we've been given under this Wall Street Reform and Consumer Protection Act is that we are now going to oversee the over-the-counter derivatives market. Currently, what we oversee, Suzanne, is about $5 trillion in annualized trading. But this OTC market, it is $600 trillion. So, yeah, we need a couple extra people to help us out.
I'd say. So you're still optimistic you're going to meet that January deadline, even though the chairman said it's not doable. How exactly are you going to do that? Just quickly.
Well, again, this position point proposal that the chairman instructed staff to do will get us a long way in a stopgap. We can move forward on the spot month limits sooner rather than later, and I think that we should move forward on the other things as soon as possible. I can't give you a definitive timeline because, again, we don't have the proposal in front of us right now.
Okay, and when will you be getting that, or when is your next meeting? What should we be watching for in the market?
I think we adjourned subject to the call of the chair, so it's a better question for the chairman.
Okay, we'll put that out there to him. We're going to leave it there, Bart Chilton, but I thank you very much for sharing your thoughts with us. It's definitely an interesting topic, and the market is watching it very closely. Our thanks to Commissioner Bart Chilton of the CFTC, and Mark, certainly a very controversial issue for the commodities market. Back
Suzanne,
to you.
Commissioner Chilton, thank you both so much.